Alright, guys, so welcome back. It's day 4 of my study arc. Um if you have been following along, yesterday we talked about divergences and specifically regular divergences. We went through bullish and bearish examples, and I showed you how to spot them on the RSI indicator. And today, as promised, I'm gonna get into something a bit more advanced called irregular divergences. And now, don't let me scare you. I know it sounds very big, but I mean, when you like get a bit of practice, it's easy. It's basically divergences with a small twist, and trust me, there are like much harder. It's a bit harder to spot, but when you do find them, it's the signal is very strong. So grab your notebook, like take some notes, and let me break it down for you. Like I'll try my best to keep it extremely simple, because if you like, that's why I taught regular divergences in my previous video, and I kept the irregulars for today, because like when you put those two together, like it's hard, like for a normal person to like it's really hard to get a hold of what irregular divergences are when you jumble with regular divergences. So like it's better this way. I hope you did like watch my videos and like get a slight understanding what regulars are. So I hope you like, after today's video, you'll be done with every single thing you need to know about divergences, so like you're ready for it. So first off, regular divergences are also broken into two subcategories, such as bullish irregular divergences, and the second one would be bearish irregular divergences. Now, remember, with regular divergences, it was relatively straightforward to identify the regulars and bearish in the RSI indicator. But uh, in if you're trying to find irregular divergences, it's going to be hard. It's going to be tough. You need a lot of patience, and like you need to have a sharp eye. Let me sketch this out real quick, so like for me to give you guys a basic idea of what irregular divergences are. Okay, so I made this sketch like a graph kind of thing. It's really easy for you guys to understand when I draw it out. So for bullish divergence, when the market is actually making high lows, just like this, and there you go, that's another high low, and then just like that, when the market is actually making high lows, the RSI indicator, because we are only using RSIs right now, the RSI indicator shows that it's making lower lows. I know you guys might not understand it right now, but I'll show you some real-time examples in the charts as well. So I hope you guys get a good idea right now, like by looking at the chart. So when the market is actually making higher lows, the indicator shows that it's making lower lows. But eventually it will respect the path of the actual market. So the market was actually in a uptrend, and when the indicator is showing that even though the market showing uptrend, making higher lows, the indicator shows that it's making lower lows. That is a confirmation that the market is like it's about to go up. Just like this. So this basically confirms that the market's about to shift up. Not about to shift up, but like it's about to pump even harder, right? And then, and let's talk about bearish divergence. So basically, the bearish divergence is when the market is actually making lower highs, lower highs, the indicators show that it's making high highs. So basically, the market is in bearish divergence. The market is making low highs. Actually, the market is going in a downtrend. Even though the market's in a downtrend, the RSI indicator, the indicator shows that the market is in fact in an uptrend. So basically, this shows it's a downtrend, this shows it's an uptrend, and eventually the market is going to respect its own movement of being a downtrend. So eventually, this is going to be in a downtrend. Even though the indicator shows that it's in an uptrend, it's going to pump even harder from this point. Okay, note this down because this is really important. Just like the regular divergence, this is also extremely important. This is irregular divergence because this signal given in the RSI indicator is extremely strong, because this is a good point to actually get in on a long entry, and this is actually a good point to get in on a short entry. And let me go back to the BTC chart, and as you guys can see, this is actually making a higher lows, yeah, high lows, but in this RSI indicator it shows that it's making lower lows, just like that. So from this point, just like I said before, it's going to respect the market's movement. It was already in an uptrend, making high lows. So from this point it pumped even harder. And as another example for bullish divergence, I will show you another one. There you go. As you guys can see, this is making high lows, and the RSI indicator shows that it's making lower lows. And from this point itself, it pumped harder. From these points, it pumped harder. And from this point itself, it pumped even harder. Let me drag it out. As you guys can see, from this point, it's still pumping. Still pumping. Like I said, the signal is extremely strong when it gives irregular divergences. All right, guys, this is the example for bearish divergence. And let me, okay. So as you guys can see, it's making, even though the market is making lower highs, the RSI indicator shows that it's making high highs. So at the end, it respected the path of the market, which actually went down from here itself to this level. Okay, I hope you guys got it. Let me explain it a bit further. So the market is making lower highs, and the RSI indicator is making high highs. So eventually it just went down. Okay, and let me go for another example. And there you go. So right now the market is actually making low highs, but the RSI indicator is making high highs, and eventually it respected the market's movement of going down. It went down. Notice how sneaky they are. Like, if you blink you'll miss them. That's why I have to zoom in and then like really focus when analyzing. Again, like, the signal from irregular divergences are extremely like strong than regular ones. So when you catch it, pay attention. Don't ignore it, but also like don't just blindly get into trades, putting your trust in it, thinking that it's going to move according to the market's direction. And always keep in mind that the higher the time frame, the stronger the signal. Always keep that in mind. Now let's move on to today's second topic, the MACD indicator. So basically MACD stands for moving average convergence divergence. I know it sounds complicated, but don't worry. It's easier than it sounds. Basically, you got two lines, just like this stochastic RSI. This has a blue line and an orange line. The blue line is the MACD line, and the orange line is the signal line. Let me show you how to add the MACD indicator to your chart. It's completely easy. You just have to go to the indicators and then type moving average convergence. So I have already pinned it, convergence divergence. Just click it and then automatically you get the MACD indicator to your charts. Let's see what has happened in the actual market when this neutral level is broken and gone up. As you guys can actually see, in this level it has broken that neutral level and it has actually gone up, and just like that it has gone up. And then we'll go to a downtrend confirmation. As you guys can see, right here it has broken the neutral level and it has gone down, and just like that in here the market has gone bearish. And just like I told you guys earlier, on and on, the higher the time frame, the stronger the signal. So right now we are in the daily time frame in Solana. Look at this. When this neutral level is broken by those two lines, the market goes down. Just like that, the market has gone down. Always keep that in mind. Now the MACD indicator gives us two signals. Basically the first one would be a bullish cross and the other one would be a bearish cross. Basically a cross means where those two lines crosses their paths. And right now let me show you guys an idea, then example of the bearish cross, where the orange line comes on top and the blue line goes down. Basically the MACD line goes down and the signal line comes on top. And as you guys can see right here, this is a good example of the bearish cross, because this signal is given from this cross itself. The market has gone down. It has gone down from this point. Yeah. So right now, as you guys actually can see this, we are in the weekly time frame. Just like I said before, higher the time frame, the stronger the signal. So this is a good and a strong signal. And then let me give you guys a good idea of the bullish cross is. I'll do the same in the same coin. I'll give you the example in the same coin. So here you guys can see that there is another cross way below the zero line. So the MACD line comes on top and the signal line comes below, and from there itself it gives the confirmation of that it's becoming an uptrend. And then from here, this is the point where it shows that it's been shifted to it has given a bullish signal, and from there itself it just straight away went up. So yeah, like I said, it's a good indicator for the crosses, and the higher the time frame, higher better the signal it is. So did you guys notice that when the lines crossed, the market actually, the momentum actually shifted? That's why I told you guys that MACD indicator is helpful. It confirms the trend, but again, do not use this blindly. Combine it with your analysis, maybe with trend lines, maybe with the RSI, and if you guys are actually using SMC by now, use SMC with it. The higher the time frame you use the MACD on, the stronger the signal. So weekly is more powerful than 5-minute chart, so always keep that in mind. And so to summarize today, we covered irregular divergences, both bullish and bearish, hard to spot but super strong when you find them. And we covered the MACD indicator. That's, I mean, what it is, how to read it, and why you should never use it alone. Okay, and remember, indicators are just tools. Okay, so they are not crystal balls, like you cannot read the market in the future market. They help confirm your ideas, but they do not replace your strategy. Tomorrow we'll go deeper into more advanced stuff, but for today, practicing spotting the irregular divergences on different coins. um, Pull up Bitcoin, Ethereum, or some other altcoin. See if you can actually find the irregular divergences, because it's really hard to spot. It's better to practice right now and get a good idea of what it is. So go ahead and do that. And before I wrap this up, let me just remind you guys, I'm still on my journey of me trying to flip $10 into 1,500. So as you guys actually saw my 2-month journey, I was actually unsuccessful. So that's why I wanted to go to my basics and relearn it with you guys. So there's still time to go. There's still a long way to go. Stick with me. And if you guys actually enjoy this, hit that subscribe button, hit that follow button, just like, or even a dislike, I don't mind. Comment, hate comment, or do whatever you guys want. Just thanks for sticking around. So yeah, and remember, don't start trading blindly. Always have a backup. Always do your studies properly about trading, and have a good risk management. Anyways, I'll see you guys tomorrow.